If you are 65 or older, there is a good chance you are missing out on money that is legally yours right now, not someday, not next year, right now. The rules around taxes, Social Security, and Medicare have shifted in ways that most people never hear about until a friend mentions it at the pharmacy or a neighbor brings it up over the fence. By the time most seniors learn about these changes, they have already missed a deduction, paid a premium they did not have to pay, or left money on the table that could have covered groceries, prescriptions, or a few extra trips to see the grandkids. In the next few minutes, we are going to walk through 5 specific changes that affect people 65 and older, what each one means in real dollars, and exactly what you need to do to claim what is yours. Before we go any further, here is one thing you can do immediately. If you have not checked your Social Security statement in the last 12 months, open a free account at ssa.gov and look at your most recent benefit estimate. This takes about 5 minutes, and it is the foundation for everything else we are going to talk about today. Now, let us get into the 5 changes, starting with the one that surprises the most people. The first change involves a brand new deduction that did not exist before. Starting with the 2025 tax year, people 65 and older can claim an additional $6,000 deduction on their federal tax return, on top of the standard deduction and the existing extra deduction for seniors that has been around for years. For a married couple where both spouses are 65 or older, that can mean an additional $12,000 in deductions. This is not a tax credit, so it does not directly hand you a check, but it reduces the amount of your income that gets taxed in the first place, which for many retirees means paying less tax or, in some cases, owing nothing at all. This deduction is temporary. It applies to tax years 2025 through 2028, which means if you do not take advantage of it during these 4 years, the opportunity closes. There are income limits involved, so if your income is higher, the deduction phases out. But for the large majority of retirees living on Social Security, pensions, and modest retirement account withdrawals, this applies in full. The action step here is simple. When you file your taxes, or when your tax preparer files for you, make sure this additional deduction is being applied. If you used the same tax preparer last year and they are not familiar with this new provision, it is worth asking them directly whether the senior deduction for tax years 2025 through 2028 has been included on your return. Now, before we move to the second point, I want to ask you something. How many of these 5 changes have you already heard about? Type the number in the comments below, whether it is 0, 1, or all 5. It helps us know what to cover in future videos, and it helps other people in the comments realize they are not alone in not knowing about these changes either. The second change involves your Social Security payment itself. Each year, the Social Security Administration applies what is called a cost of living adjustment, often shortened to COLA, to help benefits keep pace with rising prices. This adjustment happens automatically, so you do not need to apply for it. But here is what most people do not realize. The increase is based on inflation data from the prior year, and it can affect more than just your monthly check. It can also affect things like the income thresholds for Medicare premium surcharges, the maximum amount of earnings subject to Social Security tax if you are still working, and the thresholds for whether part of your Social Security benefit is taxable. Many retirees see their monthly benefit go up slightly, feel good about it, and then are surprised the following year when a portion of that benefit becomes taxable for the first time because their total income crossed a threshold. The action step here is to look at your benefit verification letter, which the Social Security Administration mails out each year, or to check your account at ssa.gov and compare your new monthly amount against the income thresholds for taxability of benefits. If you are close to one of those thresholds, a conversation with a tax professional before the year ends can help you plan withdrawals from retirement accounts in a way that avoids pushing you over the line. The third change is one that can save couples and individuals a significant amount of money every single year, and it involves Medicare premiums. Most people know that Medicare Part B has a monthly premium, but many do not know that if your income is higher than certain thresholds, you pay an additional amount on top of the standard premium. This additional amount is called an income-related monthly adjustment amount. Here is the part that catches people off guard. The amount you pay is based on your tax return from 2 years prior. So if you retired last year, or if you sold a home, or if you took a larger withdrawal from a retirement account 2 years ago for a one-time expense like a medical bill or a wedding, you could be paying a higher Medicare premium today based on income you no longer have. The good news is there is a form specifically designed for this situation. It is called Form SSA 44, and it allows you to request a reduction in your income-related monthly adjustment amount if you have experienced what the Social Security Administration calls a life-changing event. Life-changing events include retirement, divorce, the death of a spouse, or a reduction in income from a pension or investments. If any of these apply to you within the last couple of years and you are currently paying the higher Medicare premium, filling out Form SSA 44 and submitting it with documentation of your current income could lower your monthly premium, sometimes by a significant amount, for the remainder of the year and going forward. This is exactly the kind of information that can put real money back in your pocket every single month, which is why it matters to stay subscribed to this channel. New rules and forms get updated throughout the year, and the goal here is to make sure you hear about them as soon as they become relevant, not months later when the deadline has already passed. If you find this helpful, take a moment to like this video, because it helps more people in your situation find this information too. The fourth change involves help with prescription drug costs, and it is one of the most underused programs in the entire Medicare system. It is called the Extra Help Program, sometimes also referred to as the Low-Income Subsidy. Many people assume that programs with the word low income in the name only apply to people with extremely limited resources, but the income and resource limits for extra help are higher than most people expect, and a surprising number of people who qualify never apply because they assume they make too much money. Extra help can reduce or eliminate your monthly premium for Medicare prescription drug coverage, lower your deductible, and significantly reduce what you pay for each prescription at the pharmacy. For someone taking multiple medications every month, this can add up to hundreds of dollars in savings annually. Separately, many states also offer what are called Medicare savings programs, which can help pay for Medicare Part B premiums, deductibles, and coinsurance through your state Medicaid office, even if you do not qualify for full Medicaid benefits. The action step here is to apply for extra help directly through the Social Security Administration, either online at ssa.gov, by calling their toll-free number at 1-800-772-1213 or by visiting your local Social Security office. At the same time, it is worth contacting your state Medicaid office or your local state health insurance assistance program, often called SHIP, to ask whether you qualify for a Medicare savings program. These programs have different income limits than extra help, so it is possible to qualify for one without qualifying for the other, and it is worth checking both. The fifth and final change involves property taxes, and this one varies quite a bit depending on where you live, but it is worth checking no matter what state you are in. Most states offer some form of property tax relief specifically for homeowners 65 and older. This can come in a few different forms. Some states offer a property tax exemption that reduces the taxable value of your home. Some states offer a senior freeze, which locks in your property tax bill at its current level so that future increases in your home value do not increase your tax bill as long as you remain in the home. And some states offer a property tax deferral program, which allows eligible seniors to postpone paying property taxes until the home is sold or the owner passes away, at which point the deferred amount is paid from the proceeds. Depending on the state and the specific program, these benefits can range from a reduction of $1,000 or so off your annual bill to, in some states, a complete freeze that saves thousands of dollars over the years you remain in your home. The catch with nearly all of these programs is that they require an application. They are almost never automatic, even if you have lived in your home for decades and have always paid your property taxes on time. The action step here is to contact your local county assessor's office, which is the office responsible for property valuations and tax exemptions in most states, and ask specifically what senior property tax relief programs are available and what the application deadline is. Many of these programs have a specific filing deadline, often in the spring, so if you are watching this close to that time of year, it is worth making the call today rather than waiting. Let us take a moment to bring all 5 of these together, because the common thread running through every single one of them is the same. None of these benefits arrive automatically in your mailbox with a note explaining that you qualify. Every one of them requires you, or someone helping you, to take an active step. The $6,000 senior deduction requires making sure it is applied on your tax return. The cost of living adjustment requires checking how it affects your taxable income and Medicare thresholds. The Medicare premium reduction requires filing Form SSA 44 if you have had a life-changing event. Extra help and Medicare savings programs require an application through Social Security or your state Medicaid office, and property tax relief requires an application through your county assessor's office, usually before a specific deadline. If any of these 5 apply to your situation, here is what I would suggest as your starting point. Pick the one that seems most likely to apply to you and tackle it this week. If you recently retired or had a drop in income, start with Form SSA 44 for Medicare premiums, since that can mean an immediate monthly savings. If you take several prescription medications, start with Extra Help, since the application can be completed in one sitting either online or over the phone. If you own your home and have lived there more than a few years, call your county assessor's office this week and ask about senior property tax programs, especially if you are not sure whether you are already enrolled in one. And when tax season arrives, whether you prepare your own taxes or work with a professional, specifically confirm that the new senior deduction for tax years 2025 through 2028 is being applied to your return. One more thing before we wrap up. A lot of people watching this might be thinking about a parent, an aunt or uncle, or an older neighbor who could use this information, but who might not be the type to watch a video like this one. If that is the case, consider sharing this with them, or better yet, sitting down with them for 15 minutes to go through these 5 points together. Helping someone fill out a form, make a phone call, or remember a deadline can make the difference between them receiving a benefit they are entitled to, and that benefit quietly going unclaimed for another year. To summarize everything we covered today, there is a new $6,000 senior tax deduction available for the 2025 through 2028 tax years that needs to be specifically applied when filing. The annual Social Security cost of living adjustment can shift your income across thresholds that affect Medicare premiums and benefit taxability, so it is worth checking your numbers each year. If you have had a life-changing event like retirement, divorce, or widowhood, Form SSA 44 can lower your Medicare premium back down to reflect your current income. The Extra Help program and state Medicare savings programs can significantly reduce prescription drug and Medicare costs for many more people than realize they qualify. And most states offer some form of property tax relief for homeowners 65 and older, but nearly all of these programs require an application and have deadlines. None of these 5 things will fix themselves. They are sitting there, available, waiting for someone to take the simple step of applying, calling, or asking the right question at the right office. The information exists. The forms exist. The programs exist. What is missing, for most people, is simply knowing they are there in the first place, and now you do. If this video helped clarify even one of these 5 areas for you, consider subscribing so that future updates on Social Security, Medicare, and tax rules reach you as soon as they happen, because these thresholds and programs are reviewed and adjusted regularly, and staying a year behind on this information is often what costs people the most. Thank you for spending this time with us today, and take care of yourselves.